Good morning, traders and investors. Welcome to WebTime. We're going to do another recap of the market for last week. We're also going to go over a couple of earnings, a lot of earnings. Tesla, Netflix, Intel, Coca-Cola, Ford, GM, Procter & Gamble, Lockheed Martin, and many, many more had reported earnings last week. And they were interesting, let's just say. Stock fell, stock rose, and we're also going to go over my trades for the last week. So let's just start up with some rundown of the indices. The S&P 500, this SPX right here. New all-time highs. What can I say? We're just going up, up, up to the right. Why not? Why not? I'm not going to say anything here. Everything is bullish. Also, we just had our core inflation report came out almost as expected. 3% to 3.1% and 3% to 0.3% to 0.4%. Inflation rate. Accepting this, no major data. So we're going to look for next week where we should get durable goods, Fed interest rate decision. We're expecting to have a 0.24% cut on the 29th of October. So Wednesday is going to be a good and interesting day for the markets. We're going to have core PCE, personal income, and so on and so on. So it's an interesting week coming up. Definitely stay tuned for more updates on that one. Now, let's go back to our indices. The NASDAQ also ended up with 1 entire percent in the positive range, also reaching new all-time highs. Dow Jones, new all-time highs. Everything's in new all-time highs. What can I say? Even the DAX. Now DAX didn't make it. The German index did not make this one. But let's move on to oil. Had a great run in the markets, hit this 50-day moving average, which is above the 20-day moving average. So we have from the top to the bottom, the 100, the 200, the 100, the 50, and the 20-day moving average. So we have a negative divergence here. Everything is on its head because oil had a really, really rough patch here since the pandemic. We had 120, actually not the pandemic, but right after the pandemic, 2022, where we had $124 barrel. And where in the pandemic, we had negative $0.19 a barrel. So we are now currently in a $60 range. And my personal, so not financial advice, nothing that you hear is financial advice. It's just for educational purposes only. And also some fun. My personal opinion, oil is going down from here in the 50 handles, lower 50 handles, I would believe. It has here its resistance, which is the 50-day moving average, its support, which is the 20-day moving average underneath of that. But any kind of bad news is going to send this puppy down, sadly. I know, sadly, because the lower energy prices actually means lower inflation for us. Now let's move on to gold, where gold and also silver had a major correction, major pullback. I would say so. It's not the end, but I would be careful here. So let's just take a look at what happens last time. We had last time in 2024 in October, after a major rise in gold prices, we had a little correction here. A little, let's just say it went from 2,790 to 2,500. Then it went up to 3,400, and then it bounced around, and then it went up to 4,300, and it came down again. So I would expect again the same thing here. And this is because interest rates are now falling and there's no protection here underneath of it. So in worst case scenario, gold is coming down here. In very worst case scenario, we're going to have a recession where gold is going to go up to the right and then it's going to come down to the right in a major fashion, maybe even down to the 2000s. Okay, that's it for gold. And silver, basically the same thing. Silver is just following gold. But don't forget that silver is not having its best day. Let's back here. Its last top was at $49 way back in 2011. And now we were at $54 an ounce. Okay, and now we have a pullback. So let's see if silver will keep up with gold, and maybe it's going to have another run to the upside, but without a major consolidation here. Didn't manage to say that. Do not expect silver to rush up to the upside. I could be wrong, but that's just what I'm expecting. Also copper, well, copper is hanging in there, kind of dragging around after it has had a couple of interesting years. Copper in May here was the Trump announcement on tariffs on copper. Then it had a little bit of jump around. Then it had a major pullback as it took down those tariffs. And now it's trying to climb up again. But be careful with copper here. It could go up. It also could come down and have a correction. I don't know if it's it's really tracking the AI trade because the data center build out not really taking place just yet. Okay, there are a lot of promises, there are a lot of investment pulled forward, but we still need to see someone actually starting and build data center or more, because not as more were built. So really copper prices, even if copper prices are high, why would we build them? They're just going to become more expensive. Okay, I'm not going to go over the dollar. Let's just quickly go with the euro dollar. Is trying to go down here. So if this happens, this would be interesting. This would be really, really interesting to see that dollar really takes up in power. So this is the euro actually going down. This is in report to the dollar. So if the dollar rises, the euro comes down and everything else with it. And also Bitcoin. What can I say about Bitcoin, excepting that be careful here. Be really, really quiet. Because this could have the same correction as we had back here in February, March, April, and then it could go up to its next leg higher. Now, remember in my last video, I also said about Bitcoin that it somehow does not have that oomph anymore. So the percentages that you're going to get with the rise of Bitcoin, maybe not that high as like Ethereum, percentage-wise. Okay, movement-wise, you can get more bang for your buck buying maybe some Ethereum, which not doing yet. Just thinking about it, this is why my thesis is trying to build a thesis here. The truth is, everybody's already invested in Bitcoin. It's really, really expensive to buy Bitcoin. So the price appreciation from here is hard to grow. Okay, that's it for the major indices. Let's now jump to some earnings. Tesla, first things first, reported their earnings right here, and it was bad as usual. So Q4 revenue 28 billion, 12% up year to year. GAAP net income 1.4 billion, down 37% year to year. Deliveries under 500K, meaning under 500,000 units delivered, which is just going down, down, down. And gross margin 18%, free cash flow 3.9 billion. So let's be really clear here. The outlook is as following. Demand remains strong, but price cuts and expensive EV credits pressures their margin. Now, management emphasizes the robotaxi, the Optimus, the robots, and AI training roadmap for 2026 plus upcoming years. But listen, if you want to short Tesla, be my guest. I wouldn't do it. If you want to buy and hold Tesla, also be my guest. Let's just say at this price level, I don't even know what the price is. This is not a car company, so they say. Because if I would evaluate this, going to come to Ford. If I would evaluate it as a car company, it has a freaking PE of 300. Okay, Ford has a PE of Ford of 10. So I don't know what to say. It's not a car company. Okay. So what's next for this company? Just their outlook. FSD version 13, progress and real world robotaxi pilot timing, training. Margin recovery trends in automotive sectors you should look for, because the credits are gone, and I believe they pulled forward a lot of car sales due to those credits. So everyone want to have those credits and bought their Tesla. So I would say this is going to go in this direction from here on, right into the downside. That is, but I just see what the future holds for Tesla and for Tesla supporters. You hold in here, boys and girls. I will buy the dip here just to sell it up there. Sorry, but that's my feelings about Tesla. Okay, next up, Netflix. Revenue 11.5 billion reported on their earnings, so 17% growth year to year. EPS 5.8 billion, earnings per share $5.8 a share. Operating margin 28% versus 31% guided, and this is due to a one-time Brazilian tax advance. Basically, Brazil kind of upped them and they lost a court ruling and they had to pay $690 million to Brazil in taxes. Amazing, isn't it? Now, the outlook for this company, although it breached its 200-day moving average, the outlook for this company is still strong. As sales quarters, they don't really give you numbers for their assets, but they say it's growing. To drive subscriber growth in all regions, and well, the Brazil tax impact landed then a bit of a pullback in the stock. Is this a buying opportunity? I bought some down here, up here a bit, so I'm kind of in the middle with the price. Maybe I'm going to buy some more if the price is going to get here, or if the stock is going to get here oversold on its RSI, so under 30-hour RSI, I would consider buying some more shares. I also have a thesis here with Netflix. Because they're bringing in, or starting to get dampen in their podcasting endeavors, meaning they're going to take on YouTube. But I don't think they're going to take it on alone, and I'm going to already talking something with Spotify, and I can almost imagine a merger between Netflix and Spotify. Just think about a merger between Netflix and Spotify. What that would mean to the industry. That would just be mind blowing. Something like that did not exist. So we have so many things out there. I hope you always saw the news on Warner Brothers that Paramount Skydance made a bid. They said that's too low. Stock went up because people now expecting that they're going to be worth more, something like $30 a share. Maybe they're currently at $18 a share, I believe. And Warner Brothers already has HBO, Paramount, Skydance, or they merge. Now they're trying to take Paramount, Skydance, Warner Bros., HBO, so on and so on. Disney already merged with or bought Hulu. What else do we have? Disney. We talked about Disney. We have Amazon trying to do its own thing. But Netflix, if it manages to capture the audience from Spotify, I'm not saying that Spotify should disappear, but they merge. Wow, that's some money be made there. Okay, let's continue on to Intel. Man, I hold this stock for 2 years and then it pops. I already told you that I sold Intel, sold all of my Intel shares because it's crazy. Let's just go over the earnings. So they reported positive earnings. Yeah, whatever. They reported 13 billion, a plus 3% a share, non-GAAP EPS of $0.23 a share, and gross margin 40%, Q4 guidance between 13 and maybe 14 billion revenue, and a EPS of $0.08 a share. Now the outlook, why did they report good earnings? It's the government just invested in them. Nvidia just invested in them. I don't know what to say about Intel. I don't think this is a growth story. I don't think this is a comeback story. So what I think, they should be bought by Intel, and that's it. Just buy them, or TSMC, or somebody. Just buy them. Boop. Intel is gone. I started with my Intel processor. I still remember playing Diablo on my Intel 4 processor. Intel 4? Yeah. And also, I still remember playing on my GeForce 4. Yeah, GeForce 4 Titanium. That's it. From Nvidia. Man, Diablo. Missed that game. Diablo 2, that is. Let me in the comments below. What do you think? You missed Diablo. Come on. Okay, so outlook for Intel, AI-driven demand helped offset PC softness, progress in Intel 18A node and foundry. So what can I say about Intel? I really wish them all the best, but let's just see what's going to happen. I'm currently not interested. Maybe if they have a major pullback, then I'm going to get once more interested, but just again for a sell. So small position, if at all. But you know what? Let's jump on to Coca-Cola. Coca-Cola reported earnings, exceptionally good earnings. Who wouldn't like to own Coca-Cola? If you are like Warren Buffett, then you don't have any problems for the rest of your life. So revenue 12.4 billion, a 5% growth year to year, a EPS of $0.82 a share. Organic sales growth 6%, and they're growing. It's good. Everything is good for Coca-Cola, although the price had a pullback here. Actually, everything. Philip Morris had a pullback after earnings. 3M had a pullback after earnings. I'm still hanging in there with an iron condor, and I'm waiting for a bit of an old pullback because I'm negative on that option price. Iron Condor, so hope they're gonna have even more of a pullback. Already rolled my stop. Okay, now let's finish up with Coca-Cola here because their pricing and premium categories growth offset flat soda volumes and FX pressure easing, and also margin trend stable. So what to watch for next? Well, if their price elasticity as inflation cools, if any kind of emerging market price impacts their income and competitive dynamics, because hey, Pepsi is right behind them. Okay, let's jump to Ford. So Ford reported exceptional earnings here. Let's just take a look at Ford with revenue at 50 billion and 9% growth. You do adjusted EPS of 0.5 almost ish. Yeah, made it reported standardized 0.6, but actually it's 0.5 after adjustment. Adjusted EBITDA of 2.6 billion, and they guide to cut 6 to 6.5 billion after the tariff impact of minus 0.7 billion. So outlook: truck and SUV demand strong. EV division loss narrowing, although the taxes are not, so the credits are not gone, and Pro segment remains profitable for Ford right here. So let's just take a look at this action price. This looks good. This looks like, let's just see what happens the next day. So if this is going to break down and go up once more, then that is a bull flag for me. Ford looking interesting right here. Okay, next up, General Motors. Exceptionally good earnings. Now this is a bullish flag right here, ladies and gentlemen. So if this has a pullback, I will definitely buy some GM. The stock looks exceptionally good. So they reported a 48 billion revenue, a EPS of $0.2 a share, over guidance of rising core profit 1 billion roughly, and their outlook for North American margin is improving. EV rollout pace to cash flow, and their tariff cost assumption is being lowered. So what to expect or what to look out for the next move in GM is ultimate platform launches and deal pressures, also for share repurchases here and dividends, and EV truck margins for General Motors versus their competitor, which is Ford F-Series. Okay, Procter & Gamble. Now, Procter & Gamble reported earnings here, also had their dividends on the same day. Not the best year here for Procter & Gamble. Downturn last time they were down here. So I almost was expecting that this going to be the range. Okay, this is where Procter & Gamble is going to stop, then go upwards. Let's just see if this happens. I do own some Procter & Gamble. Who doesn't? You know what? I think it's a bad idea. So I think I made a mistake here with Procter & Gamble. It's going to maybe turn positive here in the next couple of years. But if I'm going to take into consideration, so if I'm taking into consideration that I have had to wait from 2025, 26, so I have to wait almost a year for maybe a 10% growth from here to here, 20%, then, well, what can I say? That's wasted money. Should have invested my money in something else. But that's how it goes. I need to own some Procter & Gamble because it's the safe play. So it's that defensive stock. Although we are in aggressive mode, maybe. Okay, now Lockheed Martin also reported earnings. Just a couple of honorable mentions here. Lockheed Martin, 18 a share, 18 billion, 9% growth, EPS $6.95 a share. Their outlook demand robust across airspace, missile, and space. Sorry about that. Okay, so just recap macro and market context. The indicators are good. Currently, everything is working perfectly. The market is optimistic. This is just dangerous, I would say, but nobody's selling. Nobody's selling yet. Let's just see what is going to happen next. Okay, trades. What trades did I do this week? I'm going to be shocked. I tell you. So we're talking from the week from the 20th to the 24th of October. And I must say that I have had one major sell here of my S&P short. And I sold it on Monday, bringing in a loss of 1,742.94 euros, which is, yeah, I had to close this position. This was just getting out of hands here. The market, I don't know how high it could go from here. And it's just going to hurt me the long term. So you have to cut your losses and move on and take that rest of the money and make something with it. A good start for the week, as you can see. And I may have to make here a small correction, not optimal how this is calculated. I have had then my tax correction to 1,292 and 87 cents. Okay, so update that one. Nevertheless, minus $1,500 loss. So started the week really good, as you can see. And that's not all. Now let's go to the positive side, because I had a little short position in oil, in WTI short. Let's just go back quickly to oil. I was shorting oil here. Yep, this was just one day. It went down. I stopped my position, closed my position here. US oil. This was on Monday, made a 36.4 share, and then I went back in, but later, actually went back in a little bit later here. Take a look here. Netflix. I closed my Netflix position, the symbol NFLX, just before the earnings, making 104 euros, and then bought them back. As already told you in the video, I bought back a little bit of Netflix there. Then on the 23rd, once more WTI oil as oil, made a little trade there, bringing in 200. This was a long 3 times ETF, making in $286.3 a share. Okay. And last but not least, sold one Apple share just because I'm kind of all invested. This was yesterday on Friday, and put that money to work somewhere else. So $41.6 a share as profit. So there we go, minus $1,100 for this week. That's not good. October is looking not good, currently at minus $659 in the negative sector there, but I have a good feeling we're going to bring this into the positive. That would be at least my hope for this month of October, and then November, December, to see what happens there. Okay, thank you so much for watching. Don't forget to like, subscribe. I'm Norbert, and I protect wealth, build and protect wealth. Catch you next time. Bye-bye.